So their version called PFF is so.
Okay, I think I've got everything. So I tried to put together a little bit of a PowerPoint since the market has topped now. So this here is a chart going back, and you can see the 99 top for 2000 and the 07, and then how the market rolled over. This is the S&P 500 index. I didn't do all the indexes in that. I try to keep it pretty simple. Is it? Have we got some? Wait.
Access.
I'm trying to do this online, so we've got it online. I just want to make sure the sound's on before we go too far. So as you can see on that chart, once it rolls over, it retraces a ways, and all of us in here pretty much remember those markets. And so you can see we've just started over the top.
Take one. I'm getting it.
You can hear?
Yeah.
Okay, good. I don't know if anybody's online or not, but it's besides the point. So there was 2000 when it topped, and I cut these off pretty much where it bottomed from that, the market corrected to. And there was 07, a lot more further down, a lot more radical. And here's where we are in 2015. So look how they look real similar. If you look at them and you go back.
It's like we're going lower.
Yeah. So this is now. There's energy, and here, right in here is where it topped. And you can see, and that was about September. There was energy in 09. Now it's a lot different kind of chart, but it actually chopped early the same. Transport was the next top that we've had, and it topped more in December, right in here. And here was transports in 09, which no chart's going to be exactly the same. But it kind of did the same thing. It started to top. Here was our big run of biotechs. Actually started topping back in September. I remember in this meeting we thought it was starting to do it back in here when I went through this little jiggy jog. Biotechs in 09, hard to say. I mean, it's kind of all over the place. But they did, here's 09, it did run down with the market. So that kind of shows you when the index is top, everything tops. Everything comes down together. And so here's real estate now. You can see back here, March and June. So we got a sector that's topping a little bit later. There was real estate in 09, which obviously it really topped. I don't know if I can get rid of that.
Oh, the mortgage.
There's materials, which this is a little bit later, where it's topping. Financial, I don't have these in perfect order. Coming in December, actually about right here is your true top, and it bounced back up. Consumer, now we're getting into the later stages of where we're at now. Consumer staples, this is the last hurrah sector, the stuff that we're in right now that's, we'll go through this, we'll probably come up with some names. Utilities, that's pretty interesting. We got a big old cup going on because money always goes to safety. And there's gold. We got a cup, and in this last month we've had a rebound in the metals. That's the Spider's Trust. The thing that doesn't match, if you look at the metals back on the other two markets, they continued through the downtrend on an uptrend. So that doesn't quite match. But I didn't put that in there. And I tried to, this list I handed out, who hasn't got a list yet?
I need 3.
You want back here?
You need one back here? Grab one. Okay, so what we're looking at on there, and I don't know if they're in the same order or not. Dave has set these up, and these are ETFs or iShares that represent the different sectors. And this is one of the easiest ways to go through and kind of see the sector. So I tried to put them in order of how the sectors rolled over and failed. So the first one we had up there. So the reason I give you this list, you can put these in any, like they were talking about stock charts or whatever, or on investors.com. Put these in a list of your own and roll through them to see how the sectors are rolling over. The same thing as we're doing in MarketSmith. It's just easier for me to do it in MarketSmith. So the first one is XLE, and I'm going to have to put them on a weekly to see it, and that may not even get us back far enough. Yeah, it did. Kind of. And I can go back and I can put the time frame back further. I mean, here's a monthly. So you kind of see there was the 08 when energy rolled over, and we're probably not quite far enough to see the other one. So these are interesting to look at. So there was the first industry that rolled over. Then here was transportation coming in December, just like what I was showing you on those other charts. And notice how on its way up it hugs the 50, breaks through the 50 ends up under the 200. Kind of look familiar to the market and what it's doing right now. You know, we got a little bounce back there at the end. There's the biotech, which actually that was a little bit later. I should have had some of the others earlier than that. But the same trend going on. But look how it started clear back here in 11. You know, and it hit the 200 a couple times. Well, actually, that'd be the 40 week.
I want to point something out on this chart.
Does that go from 11 to where? 2011 to
Well, this is starting in 12. I can back up the
where does it
chart.
go at the other end?
What's that?
2012 to what?
Well, to today.
To today?
That's
So
a
right-
weekly.
Right here, on a lot of the indexes, when you hear stocks breaking down with railroad tracks, the indexes will actually show weekly bars where the first bar has the top at the, closes at the top, but the second bar will close at the bottom. I've done a lot of going through these. So when you see the leading index and the biotechs went up 400% from the 2011 breakout to the top end right here, and you see, plus this closed outside the 3X Bollinger Band on every time frame, the daily, monthly, and weekly. And that's a classic topping pattern that O'Neill talks about as railroad tracks. That's how it looks like on indexes. Individual stocks typically will have the tie connected where the closing price both weeks are basically the same, but on the indexes you can see it where the first one closes at the top, the second one closes at the bottom.
There's healthcare. The biggest thing probably to really look for, if you rode any stock like what we're supposed to be doing, and my goal on the next ride is to get ones that you can ride up through here, the majority of this, where you've got a pretty good profit cushion. When you come in these areas and it starts doing this, you're going to get back some of your profit even if you're not paying that close of attention, because, you know, not everybody can do this every day and really watch it that hard, but when it gets in here to see all that volume starts coming in, this is telling you that, you know, it's topping out. And IBD is going to tell you they've been telling us we're in a correction when you get to that point. So there's real estate. It's really choppy. You know, you got to realize these are ETFs or iShares, so they don't track exactly. You can go in and find. That's why I printed out the other 200. There's ones in there you can look at. So here's materials, and I found this kind of interesting. It actually rolled over back in, well, it topped in September 14th with the oil, and then came back, and in March and June. And then you go from materials into industries. The materials top before the industries. And there's the Spider financials, which that's something later that's just in the process or has just stopped.
See what the RS line is doing on the financial, go back to that. How the RS line is continuing to break down. With regard to so with this breaking down, one of the things that if you look at the flash crash lows, we're basically going to go through and every indice and every stock, about 95% of them are going to take out their flash lows. So if you're holding something that looks like this and hoping, we got more down, this is going down another 40%. And that RS line is confirming that that's the direction we're going.
You just said this is gonna move down 40%.
Well, it closed today at what? What's that value? Closed at 20. This is down at 18.
Yeah, see if you go back, and I
You
can,
go to the flash
Well,
crash?
depends how much time we want to spend on this, but I'm gonna run this back where you can see the past. So there's consumer staples, so notice how that hasn't rolled over yet, but see how it's getting kind of more volume coming into it, and it's horsing around the 50s, well, it's actually be a 40-week, or 10-week below the 40. It's got itself back above that, but it's still hugging around the 40-week.
And it's back at new highs and look, the volume's disappeared.
Right, the volume comes in when it's actually selling off.
Buy volume.
And then here's the utilities. Notice that nice cup like we had back on the other chart. Flight to safety by money, you know, trying to break out. So if we go, let me see if I'm done with these. I guess I got a couple more here. So there's gold. And there's your silver trust. And it's kind of spiked back up a little bit here just recently. So what we can do is we go up here and we set it back. If I can do this, which I'm kind of going to be repeating what I just showed you anyhow,
Why does he have green bar up there?
because that's one of the first oil stocks.
It was
And
one of
I
the
just wrote,
transportation stocks that topped first.
Oh, thanks.
yeah. I don't know.
Transportation stocks actually topped about 2 months ahead of when the transports actually topped because they were doing them in different segments.
So we're going to go back up and we'll roll through those real quick. And then we'll go on.
When do the semiconductors, your favorite?
So now this is 09 when the market topped. And I chose an area where the market had found a bottom. And notice how there's your energy. So I guess what I'm trying to point out is the market repeats itself pretty much. And you can go back and punch 2000 in and it'll do these same things. So you guys got the same symbols I'm looking at. You can punch those in anything and they should come up. Now the biotech obviously didn't do it. And we already looked at these ones, so I'm not going to spend a lot of time on it. But see how it's really just mimics the same thing. And if I ran these back further, you'd see the run up in them. There was a real estate which was really severe in, 07, 08. That one you can't do. It's not that old. There's the industrial. And financial. Look how bad the financial went that time. And if you want to do your percentages and all that, peak to valley, 70%. It's pretty much. There's consumer staples. So once again, consumer staples doesn't even get it pulled through these severe corrections. And utilities, everybody thinks utilities are safe. There's utilities. And this is what I find odd. See, gold held through them, and silver. And actually took a big ramp run from there. So now we go back to today. And so I just went through, in this other list you've got, it's 205, isn't that what it is? Stocks. There were the leaders. And Dave come up with this list. I had started on it. From 2011 through 2015. So these are for your own study, and I picked about 30 out of here because there's no way we could cover all these. They're good examples of each sector and how they rolled over.
Is that the way we're
So part of the list is, these are all the stocks that came through our leadership screens since we started doing it together as a group back in October 2013. That's when we first started coming up with the leadership group. And so as you go through all these, you'll notice not all of them at the top. Well, some of them that haven't topped yet are the ones that are still on the leadership list here the last 2-3 months. They're in their final stages of being ready to roll over. And when they finally break down, they're the last of the leaders. And then you know the market's going to accelerate to the downside when the last of the leaders. That's what happened in 2007. That's what happened, or actually 2008. In 2007, the index is actually topped in October 2007, but a lot of those charts Sam just showed you, the peaks of the sectors actually occurred in 2008, because not all it took it a while, but the big downdraft that took all the leaders down was that last leg into the summer and fall of October or 2008, when everything got accelerated and the last of all the sectors and the stocks started crashing through. So NetEase is one of the stocks that you'll see, and NetEase hasn't quite broken down yet.
Yeah, I don't know if I've got that one. We can punch ones up here.
But Greenbrier was a railroad stock, and of course the big thing about the Trinity and Greenbrier was transporting oil from North Dakota down to, because Obama didn't sign up for the pipeline. So the oil sector.
This is ocean.
So the XLE topped here, but a lot of the leaders will top 2 to 3 months ahead of time. So XLE topped at the last part of June. This topped a good 6 months ahead.
And just so you can get an idea, there's how much that thing ran. From here's the 09 bottom, and there's how much it ran up. And now here's how much it's
So that's an 8-fold gain.
Here's how much it's retraced, which is probably, if you did the math, about 70% at this point. And look how much more volatile. Now on the short side, I went through and studied a bunch of the short stuff lately. When it's breaking through, right there is your buy point.
So you went to the first break of the 50 and then coming back up where you had 2 closes above the 50, and then when it comes down that third week is your short opportunity.
And anything that's had these big runs is a real good candidate to do that. So we'll go to the next one.
So FANG was a great IPO that took off.
Now something about this one, notice how it is kind of holding up yet. There are a few.
So this needs to be on your watch list because this is holding up.
And that's the thing about this
You
whole
want to-
list. When
You
you're
want
going
to
through
find
it.
the stocks that are moving horizontal while their industry group is catastrophically failing. So this actually looks like an IPO. If you remember Ambarella had its IPO run, then went sideways for about 2 years, and then it had that parabolic move that we just watched. Well, that's what FANG is basically setting up. So PDX was actually one of the late leaders that held up and was actually correcting as the index was breaking down. But you can see, and the other thing, you don't want to be shorting something until the 50-day is below the 200-day. You want the 50-day on the underside of the 200-day for bearish condition. You see how it doesn't really accelerate until that condition's met, and then you wait for that setup to occur, and that's the real first big opportunity to short it right there.
Yeah, the only bad thing on this one is you can get whipsawed pretty hard, because look how it comes back on it.
But individual shorts, you basically need to, as soon as they go beyond 8% profit, you need to stop guarding that, because you'll have extreme relief rallies like that. That will set up the next shorting.
Well, this wasn't a good stock to short. Just looking at its past, it's choppy, so this is not a stock that you wanted to try to short. The last one was a lot better up candidate. This one was going to be choppy on the downside. And if you're going to play short, you got to try to get 12 to 18%, or you're not going to make any money doing it, because you're going to wipe yourself out too many times. Your odds aren't good enough.
So Continental was another one of the last ones to break down. And I would argue that the divorce of the company owner accelerated this through here.
But notice one thing, there's 3 waves down here. A lot of down markets end with 3 to 5 waves. So we already got 3 in the oil. Now we got transports, rail. I didn't throw that many of them in here, there's many more.
So the transports topped at around the last week of November, Thanksgiving week. So the railroads were the last of the transports to hold up, and that's essentially where you went into chop mode, near the transports top. And you see how the action where you're steady eddy, and then all of a sudden you're starting to spike the volatility up. That's a warning sign that this is a late stage base.
So here was a good stock to look at. Here was your base 1, 2, 3. And that actually, it undercut, so it became a 1 again. But like you said, that's actually 4th stage. Stock rolls over. This one, a lot easier to short this stock when it rolls under the 50 right up in here. My mouse don't want to work today for some reason. But see how it's more smooth on the way up? Whoops.
And it's actually that reversal bar this week is actually setting up the next shorting opportunity.
Yeah, it's extended past the...
So there's your wave 1, wave 2. It looks like it might be starting its 3rd wave.
I already count this up in here. This is already 1 in here, because it broke through this support area and went on down. So that's actually 1, 2. You're already starting into 3.
Really?
Fleet. Everybody remembers that name. And that was on our list. Ran up through here. Take those off. That's a little bit out of order, but. So the airlines rolled over much later. Still some of them, I picked the ones that have already rolled over. There's, Delta and Love still hasn't. Well, I think Love has. Which one? Alaska Air hasn't rolled over yet.
Hawaiian Airlines.
Hawaiian Air, yeah. But see how they get below the 10-week and live there. And now see how the volume's coming in. Here's Love, which it's struggling. It's trying
So
to get.
this rally on no volume it needs to be taken out this volume here, and it's not doing that.
Once again, though, look at this. So here's your. You want to look at past stocks. Here's your past. Stage 1, 2, 3, 4. See how it's getting extended? So here's 1, 2, 3, 4. It's all there. Kind of rolls over. The oil's supported it. Here's Alaska. once again. Go back, here's 1. And they count that as 1 because that was a 1A, but I think that's 2, 3, 4. It's almost clear up to 5. It's actually counting a 5 on there. RS line's still holding up. So now we're in medical research equipment. Same thing again. These are just good to look at from just how, and what we want to try to do is catch these things coming off of first or second. It's tough to catch them off of first. If we can catch them off of a second and ride most of this run, that's my goal for this next time, and hold them and ride along. See how it stays pretty good, except right here. You might have got tooken out there.
So that was our beef bottom in October
Yeah.
14th. That was our last buying opportunity.
Here's VRX. This is the stock we talked about a lot throughout.
It's back in the papers today, setting up another accounting issue.
Yeah. So way back here, and actually I need to run the chart back further if you want to see the full run of it. But there again, I guess what I'm trying to show is how they retrace about 70% from that. I mean, it takes all this time to get up here, and one would think all you got to do is short these suckers, make a bunch of money. It's not. It's hard because you don't know when. But there again, right up in here, it was.
Well, the former leaders, if you expect about 12% of the former leaders will lead in either the next bull cycle or the following bull cycle. And of those 12%, they only break down 30 to 40%. That's assuming the indexes break down about 25%. But anything that corrects 70% or more, you want to leave off. It's not going to lead in the next market cycle. So anything that's correcting 70% from its peak, it's not going to come back and lead this coming up cycle that we're getting ready for, because the chart's just broken.
So there's Arcadia, which it's, you know, holding up somewhat. A lot of volume coming into it. Jazz, we talked about that a lot. Biogen. I mean, who would ever think these, I mean, the way they were going up, you'd never think they'd quit.
And there's your classic railroad tracks right there.
Plus,
Yep.
let's see, 37%. I say, how many sales signals can you find just right in this whole area? You know, from all that we've talked about that. I mean, if we put it up on a daily and looked at it, you'd probably find more. So these are really good ones to study while we're in a market downtrend.
Why aren't you identifying pocket pivots?
Because there is no pocket pivot happening.
Thank you.
So here's Gilead.
Well, let me correct that. The stocks that are breaking out are showing pocket pivots, like Hawaiian Airlines. There were several pocket pivots on the Hawaiian Airlines chart recently that really said it's okay to go into the water. The stocks that are actually working are doing the pocket pivots. That's how you know it's safe to go in the water with them. But they're retracing at somewhere between 8 and after they go 15%.
If you're truly trying to do what CanSlim is all about, you're really not worrying about pocket pivots. I hate to say that, because what you're trying to do is capture a 3-year market. You're trying to get in 2011 and buy Apple. You're trying to buy Chipotle Mexican Grill in the last run, and then you're trying to sell it when you've made 200 and 300%, and that's where, because the money's made in the holding. I mean, if you want to do that, you're playing short term. And it's a good way to get in, but so there's Horton. There's one that's really got killed lately.
But man, So anything that corrects 90%, you definitely don't want to be around it.
And it's gonna take a lot for that to turn around. And that's something a lot of people will go and buy because they're like, my gosh, look what that company was, it's so cheap
What a
now.
deal.
So a good example of that is Cisco. Cisco topped at 80 and it went down all the way to 8%. Well, it's nowhere close to reaching 80 again because it corrected 90%. And we're 16 years later from that top and it's still nowhere close to getting halfway back up.
So here's banks. You notice how they're just, I mean, look at all the volume that started coming in over here. You know, it tested it all here, pulled back up, it didn't have a lot of volume.
So this was one of the last leaders, and it's actually already taken out its flash crash low in August timeframe. So if the former leaders are taking it out, the rest of the big boys are going to be going to follow that.
Bank Ozark.
Ozark had the same thing. There's your flash crash low, and it's broke down after reaching that top, and look at the run it had. So they keep saying the financials didn't participate in the last run-up. Well, yeah, they did.
I'm gonna flip it on a monthly. And see, you can see it started clear back here. That's quite a run.
So in 2000, this harsh correction, look how this stock, although this was a harsh, look how quickly it recovered. That 1 month told you it was going to resume the leadership because it recaptured its former peak in the RS line.
So out of this list of 200, if you say 12%, that means there should be, what, 12 to 15 stocks in this list that'll recover again, probably.
Maybe.
At least 10.
Maybe.
That'll be, may lead again.
So I would argue Facebook's one of them.
Yeah.
Google.
Well, why don't we wait on that a minute? Let's go through and we could circle them and then throw the sheet away for 3 years and pull it back out.
Beautiful sheet.
So
But
there's
the-
Wells
what-
Fargo, now we're into the bigger banks.
So look at Wells Fargo. XLF hasn't broken down yet, but Wells Fargo has already taken its flash crash low out. That's one of the reasons why I was pointing that out is a lot of the banking stocks have already corrected and the XLF is still holding up. So JP Morgan,
So it's interesting, look at this, look at this. Here we were clear back here, here's stage one. Right all the way, where we get whipsaw out, you start looking at a daily chart, watch how much it changes. Now try holding that.
yeah.
So you gotta really take the noise out some. And the only way you're gonna do it's through weekly. I mean, this is gonna take you out when you were riding along here, but if you could've got in here and rode up to here, here, rode up into here, and this would just chop you to death, which is what we've been doing. So now and I think we're getting close to the end. I threw a couple others in here, big leaders. Back there's stage one, starting way back.
So this was when I redid the screens in October timeframe, or actually the first part of the new year was to catch this breakout right here. So this was our correction, and this held up quite nicely, and then you had a beautiful breakout, and all you had to do was run, and you went from 20 to 50. And you actually had a exhaustion gap up at the top on that.
It was Under Armour.
So one of the things that you keeping track of 1, 2, or 3 or for 1 or higher splits is a warning sign that you're getting close to the top. And this last breakout, Under Armour coming out of that volatile breakout, you had a base on base structure. If you bought that breakout, you could have held. It would have been hard, but the flash crash day was scary. That son of a bitch moved from 95 to 80 and then back up to 91 in a blink of 30 minutes that day.
You know what the average drop on a flash crash day was in percent?
It depends on what you look at. A lot of the ETFs are showing 40% retracements. Look, put up RSP.
And why don't we finish this?
Okay.
We're doing- Here's night.
So the shoe companies are in the, this is the last, this is going to be a late stage failure right here. And the reason why I say that is because the other groups in its market are breaking down.
I don't know, I just threw a couple others in here. There's Visa.
So the credit companies are in the process of topping. So this is another one where you're just getting, actually it's setting up the short right now because you got the cross happening. So that would be a good one to try and short if you wanted to.
Yeah, I don't know.
And the reason why I say that, there's one of your 4-for-1 stock splits. Its cousin, MasterCard, was an 8-for-1 stock split.
Yeah, I see what was here though where you short.
Well, I'm saying another setup because you're back testing the 200 in the cross.
Right. So now we're into the REITs. That's the last of the last.
So look at Store since it's been on one of my screens the whole time.
I think it's actually the next one.
Okay. So it had a nasty reversal day today, or week. So we might be seeing the end of the REITs. Because that, look how many, on a candlestick point of view, look how many closes it took out today. That is a major sell signal in the candlestick world.
You short that?
No, I wouldn't short that right now.
Be ready to pay the hefty dividend.
Oh yeah, because what is the dividend?
It's 5%. Yeah, if you're shorting dividend stocks, just be aware of where
I've
the
done that to myself
dividends are
already.
paid, because you're going to be the one paying it.
Forgot to look. So that's that list pretty much.
So we know what the uptrend has been since, what, 2009? And now it's topped, right? It's starting to come down. Based on the length of that uptrend, do we have a good idea how far it might come down? There's no rule of thumb. or anything?
So go back to the S&P 500. And put it on the weekly chart. Maybe the monthly.
Well,
So, go back to the monthly. That's actually better.
we just back it up.
No, I want to show the monthly.
Oh.
So here's where your major support is, where I think we're going to come down to this level. That's a 28% correction on the S&P 500 from that point right there to that point right there. It's a natural line. Then if you look at the composite, the comparable level is a reasonable fit for the 2000 rally. So put the composite up. So if you come right through somewhere around the 3400 level where these two shoulders are, this peak on the way up, whoa, 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 right there. And then on the way down, highlight the cursor there. So somewhere around this supports, so possibly 3400.
Now, where I'm at with all this a little bit right now, we're right here. That's our first line of support. So before you go and saying it's going clear down in here, it's got to take this stuff out. And We just had, so you gotta change directions quickly. We
Goes
just
right
pulled,
through, yeah.
exactly, right there, it found that back, and now if we lose that, then yeah. Cause look, you got all this right here. The flash crash, I ignore that, just cut that stupid tail off and forget it. Don't even pay attention to that thing, that's where I am on it, cause it happened in the morning. And yeah, all these stock, just, it wasn't enough of anything, because did your stock close there that day? No.
Well,
It just happened.
Hang on.
It's-
AJ from the Naperville group did a study of all the flash crashes of similar nature, and they basically, it is valid because there's been 10 different precedents where it's happened in past corrections, and every time the lows are taken out, a lower low is made. Doesn't matter what you look at.
Well,
with
to
the
me,
chart.
what it's showing is that there was a lot of people willing to sell here at this high escalated thing, and the market went on over and rolled over. As far as what actually happened there, I don't think you can use those
What
as
happened is
support.
all the orders that were, the limit orders that were placed in there that were at ridiculous levels, there was no, the computers basically went and found a print at the open.
Yeah, and somebody probably made a lot of money too.
And because they've taken the people off the specialists off monitoring that, you couldn't stop it. You had to let it happen. So that's one issue, once we get into volatile, you don't use stop limit orders.
Yeah, because they'll take you out at the bottom.
I know KKR at that time, and it went down to $8. I'm glad I didn't have a stop order on that.
So what were we looking at next here? The only other thing I had really to show, this is yesterday's paper. And didn't stay on the page I wanted it to, but it's in PDF, so it shouldn't take too long. Not too far. So, before CanSlim starts working again, we cannot have this kind of stuff at the top of this utility, mining, food and beverage, insurance, office, alcohol. We finally do get internet in here, apparel. So yeah, we're at a support area, but what's supporting us is a whole bunch of stuff that's in poor markets. Apparel is there, there's building finally, but we're already getting pretty deep into the market. So until you start seeing some of these other sectors pull back up in here, which can happen pretty fast. There's your banks, chips. See, in the banks we're saying, actually, they're probably going the wrong direction, down, not up. Chips.
So there's a disconnect between the chips being ranked 18 and the three industry groups being in the top 28 of the industry group list. So something in how IBD's presenting materials giving you a disservice there. The chips were in the top 10, they're continuing to go down. So, and there's a lot of chips that do not look healthy.
You guys are telling us, though, that this whole market has a long ways to go on the downside. It's following pretty much oil, and there isn't anybody in the oil field, all the CEOs say oil is going to be up in the $50 to $60 range by the end of the year.
I tried to say that where we're at now could be support, okay? If where we're at now holds. If we break through where we are, we're going to go down to that next level. We may go down from there a little bit. It's hard to say. You can't say right now we're going to correct another 30%. I'm not going to say that. Because we have
Well, I
gone
guess
down
what we're seeing here is
18%.
contrary to what the the experts say.
Sam, go down to the bottom of this page. So one of the things that will tell you is just monitor this table. When you see this list start showing up where the lowest comp rated stock is below 85, that means you got selling going on. The leaders, you got laggards that.
Right, no
is
good
what's
leaders
falling.
leading.
When you see the ETF 3X funds start showing up here, the bullish ones showing up here, that means you're in a wave of selling down. And I can tell you, once a wave of selling down, you have to count to 3 waves of selling down. I've got a process that I've gone and put together, and because we've already had 3 waves of selling, we've had an 8% rally. So the next wave, as soon as this shows the next wave of selling, you're going to have 3 waves of selling down. And that means you're going to take out the lows because you have nothing supporting this. This whole rally has been the transports, the metals, the mining, the energy laggards. I mean, they're hiding money in Exxon. Exxon has gone from 74 to 83 in this recent 7 days. So this follow-through day, you have no leaders breaking out that have 25% gains in EPS for the current quarter and 25% sales that are a comp rated stock 95 or higher.
Well,
I
look,
can't see it from here, but how far does that RS line, you're saying once you,
So go to the bottom,
the bottom there?
So right
What is
now-
that? All right, what's that,
95.
95?
So
wait a minute.
in the last 8 days, this has been holding up between 85 and 96. So we haven't had a day where it's closed under 85. But I tell you, when the selling starts, the bottom of this table will be a single digit, it's going to be below 50.
Would I look at this and see, how many pluses do you see in there that are above 40? 1, 2,
And that's a small cap stock.
right? When we're in a true uptrend, you will pull this up, and yeah, these are all 99 and 98s. But these over here, some will say 120, 90, 110. What do we?
You're saying
I
over
would-
here, right?
No, on the upside. When we go into an uptrend, we're supposedly in an uptrend, so your uptrending stocks should have volume going into them. And we got Google sitting over here with 36% less than normal volume being as a leader. That's not a true, there's not money
I
flowing
agree.
in there.
But on the converse, look at the downside. You have a leader breaking down on volume. You have a leader breaking out
Exactly.
that fell.
That's
That
why I'm
was a
saying, so
reversal.
they're saying we're in an uptrend right now, but the trend's not here. When you see this should be pluses, and
You
this
have
should be,
possibly, that's an IPO that's already broken down. It's a relief rally. But you got a leader breaking out that failed on, that's a breakout failure. That's a nasty reversal. That's a 6% from high to low reversal right there. That's an airline stock. There was one other. And here's your solar play. So it's in the process of breaking down from its failed breakout. Then you go back down. So my problem is I'm looking at this list and this is telling me there's better quality selling on the downside versus better quality buying as the indices have been going up 1 to 3% the last 5-6 trading days. So you don't just go gapping up 5 or 6 days in a row without some backfilling. At least there's going to be a retracement, and that retracement of how much selling happens is what's going to dictate. The selling that occurred Thursday and Friday was good because it was lower volume. But today, I'm waiting to see the final volume. If today was rally day 5, since follow through day 5, and if you have a failure in the first 7 days, doesn't bode well for follow through day working.
and this is the smallest I've seen this since they've come up with the IPO.
So the IPO leaders, you got 4 reads, and it's been that way for about 3-4 weeks.
These
now.
guys are having a hard time coming up with articles to write. If you
And
notice.
by the way, this one's breaking down today with the nasty reversal. And this one's living below the 10-week line. And if you looked at the sector leaders, we were at 0 for several days, and then they put NetEase back on. Then
Well, yeah, look at
they
these.
put 4 former leaders. So when those 4 former leaders break down and disappear, that will tell you whether or not the rally's on.
All right, so let's see.
So let's go look at those 4 sector leaders on MarketSmith and see how they look.
Oh, they're
But
right.
hey, go back to that chart. Let me just remind. Again, the easiest way to tell whether or not we're in a healthy environment, if you guys just start a spreadsheet and track these 5 numbers. The peak for the transports happened the last time we saw 800 A stocks. The previous time we saw 800 was when the energy sector peaked in June 2014. Those are the last 2 times this has rallied, and it stayed above 800 for 2 or 3 days. In 2011, when that breakout got above 800, it stayed there for months. The correction didn't start coming until you finally broke down through the 800 level. So all you have to do is track that, and as long as this is 5x greater, we're not going anywhere. This is telling you that there is heavy distribution going on.
Can you bring that up so that's bigger so we can read that, Sam? Those numbers down there.
That's what I mean. When they
Just
say-
remember that runs 1 day behind you.
Huh?
Yeah. What do they mean?
It skews this way.
A quality, so,
So this,
right, distribution, so like, see how this
Is that
is
the
E?
number of stocks?
That's the
in
number of
there?
stocks.
Okay. All right.
Dave was saying when we were eating, this
so
doesn't
there's
have-
about 6,000 stocks that trade with volume that are priced $5 and higher. He doesn't look at anything below $5. So that's the database of stocks. In MarketSmith, that number is about 5,300. Okay? So all you're doing is collecting this. And you're watching it go up and go down. A bottom happens when this is under 200. Okay?
What did we hit?
Huh?
What's the lowest we've had there?
66.
66. See, now you're saying we found a bottom.
No, I'm not. I'm saying this number can go touch 66. You asked me what's the lowest I've seen it.
Okay.
In all the corrections
You just
since,
said though the bottom's found when this gets below 200.
and then you asked what's the lowest I've seen it. 66. It was
Right.
one of the bear market corrections where we bottomed it. It was either 2003 in October or 2002 or October.
Is that the NASDAQ that you're looking at?
Yeah, that's the
What
net.
about the?
They don't do one on the other one.
They
That's
don't do it on that.
Well, this is all stock. This is this isn't the composite 2,500 stocks. This is the whole stock
They call it
U.S. world that
IBDs.
is $5 stocks
Okay.
that trade in that volume.
It's another one of his priority things.
Okay.
Just what you need to know is look there and don't worry about it.
I guess I never noticed those numbers.
Well, we've been talking about it some, and Dave's trying to emulate it, but he can't. Well, there's too much in here. It takes you
Yeah,
years
yeah,
before you
it's-
realize.
yeah.
Then it takes you 2 hours to read the paper because you start looking at
I
all
know.
this stuff. So you got to decide what works for you. You know, what you need. What do you really need to know right now? We've had a little rally. We definitely have topped out. You got to be cautious. You can play a little small ball if you want to, but the market's not there because number one to me, you go into the stock list, there's nothing there to buy that's a true growth stock. We're trying to play growth stocks, not REITs. We're trying to play growth stocks, not utilities. You know, if you want to work for
You gotta hide
dividends,
someplace though until this is over.
cash,
Okay.
Cash.
and you can play a
It's a
little small
position.
ball. Right there was a little playable rally. Right here was, if you draw a line across here, there's your support. Here's where we are, there's your resistance, here's your overhead supply gonna dump on you.
Actually, if you draw a line connecting that top, that top, that top, that top,
We're above it
you
already.
basically just came in and ran into resistance. Drawing the top to there.
And we can do it when we
extending
go over on the regular one. See,
And
look
all the-
at this, if this is a true rally, where's the volume? That's why I sent him a message the other day after the market, it was a rally day, and like, where's the beat? It was on low volume.
Yeah.
So that's our problem, seeing the same thing here. Where's our volume? When it's coming down, it had plenty of it, but it's not getting it on this upside.
But you see this little selling that we had those 2 days? That's the type of action you want to see. But the next day, you wanted to follow through and go gangbusters.
You know, and then there's this, which,
Which, by the way, the other thing that I put with that table that I sent Sam on the indexes topping, each one of those sectors that topped corresponded to a put-call ratio that spiked within 3 days down to 0.7 to 0.8. This whole rally, we've been hovering at 0.86, 87, 87, coming off a quote-unquote buy signal.
yeah, see, and here's your, instead of looking through the sectors themselves, you go over here, top 40, worst 40.
But
And-
the part of the problem is this is based on 6 months.
Well, you're trying to do a little longer time.
Well,
frame.
that's the disconnect I'm talking about. The chip stocks are sector 18, and yet the chips, there's the equipment at number 10. There's 25 for the manufacturer, and there's 28 for the fabless, and I have absolutely zero stocks coming through, except,
Right, well, it's based on 6 months.
yeah.
The thing you can get out of here, though, is start paying attention to these red and blue, because that's how you see stuff moving around in here.
So look at the top 10, and to that point, defense, defense, defense,
Exactly.
defense.
And then
I
look
mean-
where they were 3 weeks ago, and look where they were 6 weeks ago.
So you want to know where they're hiding? They're hiding in these dividend plays.
So when you're looking down here, what you were talking about, you got to start looking through these numbers where they moved to and from, because that's not as far back, 3 and 6 weeks instead of 6 months. The chart's moving in 6 months. Just something to, I reread the book, and you start, if you really reread through the book, he talks about all this stuff, and it really kind of helps you understand why they're showing you that. You know, and here's your breaking out ones. And we've got kind of some weird ones in here right now. Nutrisystems. That thing fell apart a long time ago. Here's your Phillips 66, people looking for dividend. And look at this down here though, your volumes here on the sell sides. So that was all I kind of really had. If we want to
So
look at
can
some other
I
stuff, or
Go through a couple things on the,
what do you want to go?
let's go to Market Smith and let's look at this screen. Let me step through what
Where do you want to be?
the screener. So that time saver table, I've set up 3 screens. So one of the things that I started tracking, just to get the results of that screen there.
It's got 18.
So yesterday, this was at 22, so we lost 4. Last, on the February 11th, when the rally started, this was down to 3 intraday. It closed the day at 4.
Before we start this, let me do something real quick so everybody, because they don't have, not everybody has Market Smith. So here's what we're doing, and then correct me if I'm wrong. So here's what I do, and Dave spends a lot more time on this than I do, but he's made these screens. So here's model book, toughest to the tough, nothing. Best leaders, next toughest. And we got these, I think they're in order, from hardest to get into that screen. What should be a true leader? Nothing. Nothing.
You generated these screens yourself?
These
You created them?
he created them over the last 3 years. We used to do that best list and all that. So instead of doing that, we create these because it's a screener. And here's your parameters. But what I'm going through this, what I'm gonna do with these, when they start appearing in here, I'm gonna put them on Meetup. So if there's like 6 of them fly in here for some reason, you should get an email out of Meetup. I'll put it in there under the comments part, okay? But that hadn't been happening. These screens, since he's created them, have never been empty, okay? And they are empty. And we just keep going down. Look at this. There is
So,
nothing.
hang on. So the last follow-through that worked was October 2014. If you bought, there were 7 stock, the first 7 stocks that came through these 2 screens, the best
Yeah.
leaders and the 190 modified. If you bought all 7 of those stocks, 5 of them would have gone up and you would have had a 100% move.
Yeah, 5 of them went 100%.
So Skechers, EA, Ambarella, Skyworks, and NXPI.
And none of those are even that hard to hold.
And 2 of them went up 15% and then had catastrophic fails. They were 2 drug companies. But since then, the follow-throughs that have worked and all the market corrections since then, none of them, they haven't worked. They've gone for 5%, you had to lock them in at 5 to 7%, and they reversed.
So as we get down further, we do find a couple things in here, but this is a pretty wide screen because there's your parameters of your screen, okay?
So the 85 leaders, if you look at Friday's paper, the weekend review, this is a screen of whatever's coming through that page. That's what it's designed. I didn't want to look at 120 stock charts that were on there when you're in a healthy bull trend. I wanted the best of the best. So I set up a screen for that. So right now we have 2 leaders. Well, this is a gun play. We can look at these 2 stocks. It's not going to be pretty.
The biggest reason his screen's shorter is this right here, which is volume. Because when you do the
What
80,
is-
the
what does that mean?
400,000.
It means you have
Volume?
liquid.
Right, because
You have liquid-
when you do the 85, there'll be a bunch of stuff in there that's 50,000
Yes, I
and 6,
agree.
and then you gotta look up and see, so instead he did this, and that way you come up with a quicker screen.
The reason I came up with that is because you want quality institutions behind your trades. So the only way you can have a quality institution, up to 5 or 6 of them, you gotta have volume. You gotta have dollars behind it. And the only way they can trade those stocks is they gotta have volume on a daily basis so that they can hide their tracks as they're getting in.
Got it.
And there's IPO screen, which it's got Mellanox in there yet. So then,
So, hang on, keep going.
well, I was gonna,
So then, because we're at 0, I came up with the next round of screens that were designed to show me, well, what's the potential leadership? That's what the rest of the screens are. And that's what I want to spend some time going through. You up for that?
yeah,
So the
I'm
William
looking
J.
at-
O'Neill screen, if you look over here, this is a subset. Go to the Market Smith one first so that we can start with the...
which one you want?
The one, close this, up here.
I'll go to build.
So I started with this screen. So when we were in an uptrend, you know, like in 2013, when the biotechs took off and we were in a healthy uptrend, you had several potential. This had 120 names on it. The Friday weekend review had 140 stocks in it. It was hard to go find a quality stock. So one of the things that I started tracking is, oh my God, this is the first time I've seen this below 20. And then last week, when we got to the bottom on February 11th, before the buying came in, this was trading intraday. It only had 3 stocks on it. All my other screens were pegged at 0. Every screen of my growth screens were pegged at 0 that day. So now we've gone from 4 to 18, and we can go through some of that. So I started tracking this. The other thing is, so if you look at this, it's basically 88, it's his basic screen. 80-80, it must be ABC, and he's relaxing the EPS to 20%, must be above $10, within 15%. So he's relaxing the volume, and he's basically saying you must have quality leadership. So my screen, I modified that screen to be this. I relaxed this so that I could pick up a couple IPOs. This is the same. This is tighter. I've gone from 80 to 85. I've gone from 20 to 25, 20 to 25. I've gone from 10 to 20. I've gone from 100 to 400. I put the comp rating, and I made sure that the up-down volume is 0.7, and I want the top 60 industry groups. And the price must be above the 200-day, and the price must be within 15 cents of the 50-day, and the ROE must be 15 or greater, okay? So right now, that's given us 2 stocks, or 3 stocks, or 4 stocks, what is it?
3.
So this company needs to decide if it's going to take its cash offer to go public with some firm. So it's really not a candidate. So these 3 stocks are showing up, and they are late stage. This is a turnaround. We'll go look at these in a few minutes. So the next screen that we have is, I follow the Naperville group because they do a lot of education out of that group. And one of the things that when we're in a correction, how many stocks we have here?
5.
So, show the edit. One of the things that they judge the quality market is, well, do they have places to hide? Well, to hide, you want 25%, 25% EPS. And this was basically, I wanted an IPO that has volume behind it, that has a future that's saying, so it's grabbing the IPOs and it's grabbing the mature companies. So to do that, you had to have some level of EPS. So they're doing a 50-day dollar volume of $200,000 traded a day, i.e., so the mutual funds in a downtrend can hide money. And then they're within 10% of the top. I can tell you that since I've started tracking this about 15 months ago, unless this is greater than 30, and it also corresponds to when the number of A in the IBD 6000 is greater than 600, you don't have a rally. This is every rally in 2015, this peaked at 29. It never got above 29. Right now it's down to 5. This went down to 1 recently. So the biggest thing about canceling to work is all the earnings. If you watch the earnings, nobody's reporting revenue or revenue sales improvement. They're hiding. The companies that are making money have no revenue sales. That is not good for growth, and that's what the screens are basically saying. You have no sales. And the ones that are having it, these 2 right here are REITs. I'm not sure what that one is. That's a new one that just showed up today. You didn't bring in the other 2 screens for the time saver?
Which ones is that?
The potential list and the...
Yeah, they're in here. I don't have them in order.
All right. So the other thing that I did was, I think I
Here's
saw it. Go down.
down.
Go down. Let's look at the potential one first.
It's in here. Just hang on.
There it is.
All right, so let's look at that.
I got it at the bottom, just so it's easier to find.
So click on this one.
Lost my internet. There it goes.
So a couple traders out of the Fishers group, we sat down, we meet Friday, and we're trying to make this happen. So a lot of the things that I present to you guys is what I'm working on Friday with a couple traders out of the Fisher's Group. And one of the things that we started noticing was a lot of the things that I've shared with you from the time saver table. Well, before the market started really breaking down, I had an up version of this and a down version that I've been sharing with you. And it basically, anytime that the up version was near 100, I knew that we had a tradable rally, there's something to be made. Then we went down, and all of a sudden, I never got above 20 up stocks. And the reason is the candidate list disappeared. So I came up, okay, I'm going to track the candidate list. So that's what this is. The candidate list has nothing to do with price. It requires how many A, B, or C stocks from the distribution are there, how many comp rank are 80, current price 15, EPS 80, RS 80, 50-day moving volume 40, and then you must be above the 200-day moving average, and you must be within $1 of the 1% of the 50-day moving average. So that's basically, to be in an uptrend and to make money, the 50-day has to be above the 200-day. This basically, if you show up on this list, you got the opportunity. So how many?
77.
How many?
77.
So 77. So when the leadership started breaking down, we were at 250. So 77 is the best it's been in over 4 weeks. We got down as low as 20 stocks here recently. When you only have a candidate list of 20 stocks, institutions are selling stocks. That's all they are not buying, they are selling. Okay? So the 20 stocks, I look at the ratio of how many of those are up and down. So if you go to the up screen, the time saver up, the only thing that I add to this is price change on the day is greater than 0.5%. So in other words, it moved 0.5% that day. So it would be a candidate to be on the time saver in the paper. So of the 77 stocks, how many do we have? 17?
Mm-hmm.
So on the follow-through day, we're at 64 potential, and we had a 90% of those potential were in the up screen. That means institutions were bringing money in. When that flips to 90% on the down screen, that's telling you they're selling in mass. When I see this candidate list go from 77 below the prior peak, I know we're contracting, I know we're in a sell wave. That's basically how I'm tracking the waves of selling now. When I get, right now I'm at count 0 because we just had a rally that reset everything. So when this starts, the potential screen starts contracting again, that means we got another wave of 3 selling spurts to go through. And so that's why I'm tracking this very closely. And anybody that's following MarketSmith and has these screens, I encourage you, right now, for it to be on our screens, they're going to come through these screens first. So now we're at the bottom, so what I'm looking for right now, forget my growth screens, because there's nothing. Because our candidate list has nothing. So until the potential list is above 250, we're not going to be in a good growth screen environment. Which means, so the other thing I'm tracking is I'm lockstep with click on the A count. So the problem with the paper with that distribution, it trails a day. Because to get the paper edition updated, they are printing that table with the days old data because they haven't waited for the MarketSmith database to update. So it trails. So to get ahead of that, I want to know those numbers 24 hours in advance. I came up with the A count, and it's basically no ETFs are on it. The average daily volume is 40. 100,000 shares a day, so it's still a very thin stock. And we have 277. This needs to be north of 600 as well. But the problem right now, of these 277, 85% of them about are trading less than 100,000 shares a day. So the candidate list is still crappy. You don't have A quality stocks that have volume where the institutions can go out and buy. And then the E list is up to 551. That's coming down, but it's still 2x greater than the A's. You want the A's to outnumber. So for the follow through to work within 3 or 4 days, the past follow through days, the A's have always overtaken the E's within 4 or 5 days of a valid follow through day. The fact that we're nowhere close on the IBD 6000 is telling you the quality of this market right now. Okay? Because I'm eliminating a lot of the crappy smaller stocks that the IBD 6000 is counting, I'm developing the screens. I'm hoping to bring some correlations once I have a follow through that works. Because unfortunately most of all this stuff happened since 2015. Why? Because after I learned all that from the 2014 correction, and we had 2 or 3 corrections in 2015, I was ready to go buy and our stocks never populated. And they fizzled. And the main reason is because it was the old leadership that was in late stage breakouts that were doing one last hurrah. And the market bear is not over until it takes everything down. But then these 3 screens is what I'm tracking, and that's how I'm determining whether to buy stocks or not. And right now I'm 90% cash. Any questions? So I estimate that when this list expands to 5, one of those 5 will at least start populating either the leaders, one of these 3 screens here. As soon as we have one of those, we're going to be north of 100 on the potential time saver table. Okay? The A's are going to be above 400. And by the way, for the last 6 months, we've only had 1 day above 400. It hit it 1 day, and then that rally ended, and we went into a selling wave. Whereas 2013, the majority of the market stayed above 400 stocks because we were in an uptrend. So I'm estimating that the the E's, when we finally bottom in 2000, we're probably going to top out somewhere around 3,500 stocks out of the 6,000 that are going to be E rated. And it's going to take out the low that we had last year's low of about 3,200. So I think we got some selling to go based on what I'm seeing. The fact that these lists aren't expanding is what I'm concerned about.
Now, what does IBD look at again when they say it's a confirmed uptrend like they do right now?
So let's go to the stock chart. Call up the S&P 500. And go to the daily.
Who do you want to go?
Daily. So when you take out a low, so here's your current low, you start counting. The pink, this is considered a pink rally day if it closes, some say 50%, in the trading range. I prefer to see it 60%. But this was a tradable rally day because it closed above, it closed at 74% of the range. See where, there?
Right.
And that's a new low. So that's day one, and then you start counting. You continue to count until you establish a new intraday low, okay? So now you're looking for day 4. So this pink is 1, 2, 3, 4, and then you're looking for one of these days being 1% or higher. So either that blue bar or that blue bar was the one, I think it's that blue bar right there. So there's your 2% change on higher volume. So there's your follow-through day. The fact that you had a distribution day immediately after is telling you why you set a new intraday low right here. So on that new intraday low, that again, you start counting again. And again, that's at, so 50%, so their criteria is using 50%. So if it closes 50% or higher, it's a pink rally day. So that's day 1. Day 2, day 3, day 4, and there's your follow-through day. Sometimes you can do it on day 3 if the first 3 days are on huge volume. And going back and looking at all the successful ones, I can tell you those day 3 follow-through days at work, they close above the 21-day EMA. Okay? So, low volume, and I don't think the volume's back in yet. So we're still waiting to see whether that's real, because the trading volume yesterday was pathetic. I'm suspecting that number's light right now, because when I left to come here at 3 o'clock, we were running above yesterday's total. So 22%, and seeing what happened in the final hour, listening on the radio, there was volume coming in. So I'm thinking that's a distribution day. So typically, if you get a distribution day within 5 days of that follow-through, it's not a good sign. And you're basically running into the 50-day moving average. So more than likely, we're either going to fail here, if we fail, or we're going to fail somewhere in this white zone.
Which is back up in here.
And I think because you had a long test right here, the 50 and the 200 day, if you go look at 2008 as precedents, we're not going back up here if we're going to establish a new low. That's your fight that just failed. And that's an ugly reversal day, closing at the bottom of the range. Is that clear?
Mm-hmm.
So all there, it doesn't, that's the only criteria they're using.
So it's just
It's not
short-term price action and volume related.
They're basically saying, okay,
The reason
institutions are putting money to
the
work.
reason they watch that is no long-term uptrend has ever started without one. Everyone always starts with one of those. But
How
you
many
go
of them
through.
have failed versus?
You don't know. It'll whipsaw the crap out of you, because we went through that the last time. You get in, you go up a little bit, you build your positions, you get taken out. It's
Last year was
frustrating.
terrible. I don't know what you guys.
Well, not right now, but when you're actually in a better market, you'll still get whipsaws. Especially when you're in the 3rd and 4th stage base, which is where we were a year ago. You'd have a confirmed uptrend, you'd build your position, and you'd get taken back out. Right now is not a time. If you want to play it all, you play small ball. You play a quarter of your portfolio.
But you
That's your
also,
cold portfolio. You know,
Like
you
his idea, 10%.
well, but if you don't get to 10%, as soon as you have, I play the Fibonacci. As soon as I'm above 3%, my trailing stops at 2%. If I'm above 8%, my trailing stops at 5%.
one of the things
If I get above,
One of the things Bill says is you got to keep a 3-to-1 ratio, your losses to your profits. So if you're going to play 10% on the top side, your losses,
cut at
but
3%.
pretty soon you get yourself so tight If you got 7% on the upside, that means you only got 1.8% on the downside. Who's good enough to do that? Right, so then in 10 trades, you're gonna take yourself out 6 times and you're still gonna lose money by just sitting cash. Because he said small ball is 4 and 16. 4 and 16 or 17. Large ball is 7, and he's really 23 and 24%. That's what he's shooting for. We are not in a 7-24% market. We're not even in the small ball market. So your choice is you either play a little bit just to play around because you like to trade, and it's just a habit. Which we all have that some. I mean, who doesn't? I mean, you get tired of sitting there. You get tired of sitting there. Yeah. And you can play a little bit here, but whether that,
Sam, go to the IBD website and let's see what the volume
It
numbers
was a good
are.
time to short yesterday because that's the 50-day.
What?
Would have been a good time to short yesterday, the market.
Yes, it was.
The 50-day line boom.
The little money I play with right now that's in the market went short at the close yesterday. So yes, I agree with you.
come on. It's trying. And how does everybody like the new website?
I can't find any of the old trading videos that I want to see.
Now, if you use your phone, it works great.
No,
If you never knew what we had.
no. I've found it worthless.
Yeah, I'm sure they've got a lot of complaints. And I kind of asked that, you may want to send in, they got way too many flash ads going on here. It slows the whole thing. It was always bad, but now it's really
Yeah.
bad.
I've
So where do
never
you want to
found
go
very
now?
much of their
And this
own
is trying to
website
do it
on
on the,
So it says.
see, and this is what happens to me, the thing just basically, it's trying to flash an ad on here now, and we got to wait till the icon comes up to get rid of it. It's frustrating.
Yes.
Okay, where do you want to go?
So it says volume disappeared, so no distribution day. So that's, from a positive, that's okay.
Yeah, see, I always liked this. This was right up here. I'd pull it up, look at it, you're gone. Now you gotta go, okay.
Yeah.
I guess you gotta get used to it. In some ways, if you're brand new and never saw the old one, the pull downs, and it's got it in the mobile version right now.
So yesterday we closed with 80 potential stocks, and today we contracted by 3.
On that, a couple of those searches that you had up there was one stock that kept coming up. Was it Max Linear or what was that? name of that
MLM.
stock?
Well, that's
MLM.
what we're going to go look at. Let's go look at the sector leaders and the 2 or 3 stocks that came through our screens.
Here was today's. I think this is today's. Even this is frustrating.
They're not making money either if they put all these ads on there.
Oh no, they're making a ton of money. Because the
Not
advertisers.
enough.
That's what's paying for their engineers to put all this together.
This is the Millennium's designing a website. Sorry.
Yeah.
It is.
Exactly what it is.
Yeah, this is how their world is. You know, it's more important to have these little icons and stuff than the true content.
Mhm.
Okay, can you find?
So all those
anything on
lists
your-
of all the videos
Screen
have
there, yeah,
disappeared, so you
right.
can't find any
This?
of the
Yeah,
videos.
I saw, I got back to the old screens that I remember.
Yeah, see, you got to really use those pull downs. It's all there, but it takes it so long to load. It works better on my iPad and my phone than it does here. So let's go back.
Well,
to,
this screen's got, you gotta have a good internet service. If you don't have a good download.
well, we
capability-
don't because we're all
Not
up here
here.
in boohoo land, you know. And that's part of the problem. So where do we want to go at? Mellanox?
Yeah. And let's put the data boxes back up. So you got a wide, if you look at the weekly, you have a wide cup this was a former IPO that did a good run.
I'm gonna
And
take
then
the
you had
boxes
a
down little
dramatic
bit.
correction. So it was a 2011 leader. From the IPO it corrected, and then it had its first big run. So this was coming out, actually it took off out of the 2009. Corrected in the flash crash of 2010, and then you had a parabolic run. So it's trying to set up from this action going sideways. So this is a first stage base. And part of the reason why that's a first stage base is because this downtrend has been over a year. Once you get over a year, you automatically reset your base count. So here's your prior uptrend, and now you're kind of sloppy cup with handle. So on the daily, you're trying to break out, or this is a weekly, so you basically have a cup that might be setting up a tighter flat base right here. So because there's no volume on this, it's a potential if the market does gather its strength. You saw where the chip stocks were. This is a chip. This is a potential leader for the next chip, so definitely keep it on your watch list.
And there it is on a daily.
It tried to break out today, but it reversed. It did get some volume towards the end of the day. When I left,
Yeah,
it
see
was
there-
at the bottom.
Here's my alert line. What I don't like about this one, I don't like this way up above here. I don't like the depth at 39%. I don't like the handle at 22%. I do like how this just kind of kept, and then it jumped out, probably earnings, wasn't it, right?
But one of the things that you want to keep in mind is I'm not buying any stock, at least a growth stock, unless the 50-day is above the 200-day. So part of the reason why this breakout's failing here is you need time to let this continue correcting so that the 50-day can get back above it. So that means, well, let's do a consolidation above the 50-day or the 200-day. Maybe this stays tight for a flat base as this continues to come up, but this gap here between the 50 and the 200 says danger. So the other one coming through is SWHS. Good old guns.
Was it S?
SWHC. So they report in the next couple weeks. So you got if you look at the weekly, so the biggest thing that Bill's book says is you shouldn't expect a stock to enjoy a run up greater than 24 months. So December 2014, you're 18 months into that. And part of his saying is 18 to 24 months is what how to make money in books or stocks says. So this has had a big run here. Every time Obama or an incident happens and Obama does something about guns, it increases sales because they're going to take the Second Amendment away, right? And this flourishes. But this reversal here is a warning sign. So I don't like this action here. They report earnings here. The other company is RGR, and they report tomorrow, which is the other gun company. If you look at that chart in a minute. If you're interested in this one, this is 25 would be the breakout line that I would use, but I'd be watching what these guys stay at earnings. If they miss, then I would stay away from this Smith & Wesson. The fundamentals are better at Smith & Wesson versus this one. This one's not quite back at an old uptrend, but it is a turnaround story. Anything that's like this is a turnaround story, so it's starting to come back. It's got good return on investment. It's inconsistent on the growth rate. But there's your leader right there. So this industry group is basically guns, security, and stuff like that. So the only thing I can say, hit the daily. This one reports, where's your moniker for reporting?
I don't know. Should have been on there. Didn't that come in with
Okay,
data?
well, I know they report this week, so you want to watch them. But I will tell you, I'm waiting desperately for these two gun companies to disappear from the growth screen so that we can be done from the last of the leaders. Because this is a late stage base that
Here's a
broke
nice
down.
head and shoulders.
So that's what I'm actually
And it
hoping
started-
that's
it
a
started-
railroad track.
Yeah,
for
it
me.
started to break down here. This is too far down.
And
the
actually, if
road.
they miss earnings, that will be a perfect railroad
Well,
track.
let's see where the
Oh,
weekly
that's a
and the
monthly.
That's a,
You're
mo-
fooling
what,
me.
well, no, I was looking to see we're extended above the 40. Let's see something. How extended are we above the 50?
But you see how wide and loose and this is? And SWHC had the same pattern? It doesn't, and so if you wanted to play, I would say on a breakout above 25 and then be ready to lock in gains quickly.
When I was saying you play small ball some, here's one, you could have played small ball off the 50. It's come up to here, it pulled back, and it come through there on some volume. But because from here, so if you bought it off the 50 when it crossed over the 200, right around in here, you could see it's going to do it. 57, and it probably took you out in here, 62, so 5 points. 9%. I myself, I'm not buying this right here. Earnings have been so volatile on stuff too.
So the other one is, let's look at the 4 sector leaders, MXL. So this is another one.
ML, get it?
So you basically have a kind of a wide and loose double bottom pattern with the breakout 16. They reported a couple wild earnings ago. The only problem is this was in the same sector as DY, and if you look at DY, I think it's broken down. Because it's not, DY used to be number 1 in the space. And you can see there's the former leader of this group. This was number 1 on the IBD 50 for a while. And you can see it's clearly topped. So, because the leadership brethren has gone away, I would stay away from MXL. So the other one is NLS, a leisure company, Nautilus. How the heck this became a sector leader is beyond me, but
It took a dive today.
it has a nasty reversal, so it won't be there long, so it'll be going bye-bye. So next on the queue is what's next? NetEase, NTES. So this is a gaming stock that's in the process of breaking down. This is not healthy. So where'd you buy this?
I'm losing on this by about, I don't know what it is, close to my limit. But I'm
So-
watching the 50-day, is what I'm doing right now, and I only own, I got $1,000 of it. I'm watching it on the 50-day.
Well, there's been a number of them. if you wanted to play around, you can buy them off the bounce of the 200 day. I've done that on a few, but they only run about 6 or 8%, and then you better.
I've been doing that with the pocket pivot.
Well, I
Does it
guess
come
that's,
up through
I'm
there?
not the super big pocket
has a-
pivot person, I'm more of a,
This has a buy point of like 155, I think, the previous buy point. So I was looking at that and the 50-day, I almost bought some more yesterday.
I wouldn't be buying any more until it gets above that line.
Yeah.
It stays there.
It bounced off of it down.
that's one I've been watching. It doesn't have good parameters, but it's in the same realm.
And then the other one's HOND. So negative that the 50 days cross below it. RS line is living below the lower half of the base.
Want to switch it to a weekly. That's actually a Head and Shoulders for me.
So how this came up on the screen from that setup is beyond me.
There's your neckline. Well, it's short, but it's got some big earnings.
That's another reason why I know we're in a correction is when the sector leaders are crappy when they're coming up through the screens, and I can't determine. Look, when we're in up screen, the sector leaders are going to be very telling, and you'll be all over them, and the 50-day will be above the 200-day, and there will be a pattern that you can go. If you can identify, track the sector leaders, because they're going to, but you want to pick the one that 50 days above the 200-day, and you have a good chart pattern with a prior uptrend that you can see a 20% rally.
Anything anybody else wants to look at?
TSN,
TSM,
TSN,
M or N?
M, Tyson.
Nancy,
Nancy. I went the wrong one, didn't I?
so we're in a parabolic run. So if you're in this stock, you need to determine where you're selling. And I'm
Well-
serious on that, because look at this verticality of the RS line. This is well, I want you to pay attention to this and this. And you didn't quite, these are exhaustion gaps in a parabolic run. RS line telling you take off. This is broken a 60-degree angle. One of Mike Webster's definitions of a parabolic run is exhaustion gaps with the 10-day moving average breaking a 60-degree plane. So when it's between 90 degrees and 60 degrees, or if it's in the 1 o'clock or 2 o'clock position of a clock face, it's time you need to decide where you're taking profits. And the reason why I say that, put a what's Hormel? HRML?
Who would want to eat that?
Because this is another one, and that's
Did it show up yet? There it is.
no,
HRL.
HRL. Because this basically, if you go back to the weekly chart, this just came out of a upper channel break, and it's in a parabolic move, and it had a nasty reversal last week,
Here's
and the
your
volume hasn't come back in.
here's your consumer discretionary. Remember that chart that we looked at that hadn't rolled over yet? That's what you're-
Staples.
Staples. That's what you're looking at. And remember when we went back to '09 and we looked at that, what it did? Just as ugly as everything else.
So these
So when the money
stocks,
starts exiting out of here, it's really ugly.
so this stock, the two leaders are in sell signal mode right now.
But here's the beauty of Market Smith on your Hormel, or on your, Tyson. Notice the blue and the green lines that it automatically puts in here for you? You can go ahead and do all your other stuff, but it's a heck of a lot easier now. So yeah, if you brought this by how you're supposed to be doing, you bought it in here, you're not gonna get a full 20%, but that's a 20% gain right here. That's 25 at the top of that green line. Whenever I buy a stock, I automatically calculate from, and I don't have to do it because it's in here, I calculate from the buy point, 20%. 21% is what I actually do. And I write that number down as a sell target. You can always reevaluate.
So I'd have two sell signals on this. Offensive, what Sam's saying, somewhere around 21% of that value, right? 21% above 54.42.
And at this point,
And I would be using the close of the day before, of yesterday's close, to protect your profit. Because
don't let this retrace on you past here. And it can do that in 3 days too.
I would be, you got a night, where'd you buy it at?
54.
Then you're at 20%, you lock in your gains.
Yep.
Well, but what I'm saying is, if you don't want to do that, don't let it retrace below in here on you. Don't turn that into a loser. Because it could retrace all this in 5 days easy.
I understand.
Some try this one, ELLR.
Real winner right there.
That's a good one.
This one's showing up on some screens.
Yeah.
Not enough.
The problem is that this breakout failed, but it's under heavy distribution right now.
Yeah.
With the RS at 898 still?
Yeah, but this was at A+ last week.
Right.
It's at B+ today.
Yeah,
Can
this,
you tell, can you go back and do that change the EV rating? If you go back on in the time,
No,
they won't be.
they don't give us that tool. That is a massive database. You would crash the internet. You would
See-
crash this internet.
I had an alert line set on that here, that I wanted to see it go through. And went through it there, and then it clears it out. There's your overhead supply. We're seeing a lot of this, what I call overhead supply. Get rid of the data boxes. So we get a stock, it finally pulls up to a past area. Here's all your people remembering that, shit, I should have sold that damn thing. And they drive it back down. So what's interesting about the market right now, and this is why I say, so now we're pulling back up. We pulled up really fast
So
on
the
this one, but you
Tyson
can,
comment, see this right here? Exhaustion gap? See what it did afterwards? Protect your profits.
but what we got going on now, so we drove these guys that didn't get a sell out. They sold out in here. Now we're back up in here. How many of them are left? How much more dumping are we gonna do on this when this hits this? See, and it's hitting that old high, which I love 80, because 80 runs to 107 over and over and over. So I've been watching this one too. But how much more of this? And we got, it's topsy-turvy.
If you
That-
have no tracks, you got the red and blue one.
Here,
Yeah.
it's on a daily, should really be a weekly, but yeah, it could be. That's why I'm saying it's
So
topsy-turvy, it's
what pattern
churning.
is this?
Huh?
What pattern is this?
This? 2. You mean stage or?
What type? Consolidation is wide and loose.
But weekly, the top.
But your point, whether that's pink or blue, that still comes to the point where that's an abnormal handle, price action, and that's a warning sign that I'd be leery of it.
But if you see on the weekly, you see a lot of skyscraper blues, that's not bad.
I see skyscraper pink.
One.
Okay, go over to the daily. Again, it was A+, it's now B+. For it to go that quickly, within 4 days from A+ to B+, there's a huge amount of selling going on.
Well, it's churning.
Every other day, yeah, you're churning. High volume, you see it right there. 1, 2, 3, high volume, no significant price progress, that's a sell signal in the book. It's one of the 19. So if
Basically,
you got any profit, I'd be protecting it.
you're
I had to take my 3% profit and exit.
There you're playing your, there you're playing your small ball. Where you get your, see, and there's your wanting to trade.
Yeah, like.
I'm doing the same thing. Keeps you in the game. Keeps you in the game.
Or at least put a trailing 1% stop.
Sure. Put that down.
These are
Anything
ones.
else?
Yeah, anybody got anything else they want to look at?
What about G?
CB.
G, the class rating.
G?
And also.
Okay, we'll do that and then we'll get you.
Then the spin off of GE.
Oh, yeah. There was another one that's a spin-off of GE that come up out yesterday. I've got it wrote down.
Again, it's got a lot of churning going on.
Let's look at it on
in the
a
last
weekly.
couple days.
I like to look at it on a weekly first.
So breakout in
Well, that's
what?
even nastier because that's a big reversal.
Yeah, but it's not on volume. Let's see it on a daily. Yeah, so there's your volume on a daily though. And this day here should have closed up in the upper part of the range. And when they do this, I like to look at these on a five day.
Didn't quite-
So there's your, and I like white
Small
screen, so I
caps,
get a few more days, but
Russell 2K, mid
yeah,
caps.
put it on a 10-minute. Since it's on a
NASDAQ
screen.
composite did 19.8.
Closing in the lower of the day.
S&P somewhere around, what, 15, 14, 12, 13?
That action is not good. Lows in the day, the red bar there.
No, not good. And what do you want?
BBT.
Okay, yeah, that's a good one.
Clean all this stuff up.
Well,
Yeah.
that's what our screens are basically saying. So the stocks that come through the screens that are old leaders beyond stage 3, you want to stay away
It's
from.
broke down.
They're going to do the chop and slide.
See, that's your bank, once
But
again.
Again,
It's in that
Run
sector,
to
it's
tell.
just, and look,
As
it
long
rolled
as
over
the
right when all the others
potential
are rolling. That's why I
screen
think,
that
I think these here
um,
are valuable to
Mhm.
everybody. Because that's your basic sectors.
Yeah,
Without going into the full 32 and having to do it. You can put these in a thing, flip through them,
yeah.
and come up with, you can put those, and I don't know how to do it in the new investors.com thing, how you would even get them in there. I'm sure it's in there somewhere. So you can put it in a list and then you can just roll through them.
So call up IBB, want
IB,
it, and go to the weekly. Here's another sign. If there's one thing that you guys look at every day, it should be the time saver table. Because if we're in a correction, the index that had the biggest run from the 2011 is this one. We went from 120 to 400, a 4x move. Okay, right?
Thanks, guys.
yep, see,
On the time saver, when a rally started to go bad, IBB was selling in the down, showed up in the down column on the first day that the selling started, continued through the selling, and it was the last one that stayed on. It was when the rally started, IBB was still on the sell side of the column. So when you're seeing that, whichever that little table on, I think it's near the time saver that tracks which industry are doing the best throughout the year when we're in a growth cycle. If you keep track of that and just pay attention to it, IBB was one of those. Biotech was there all the time, right?
Right.
We knew it was because that's the one that you want to pay attention to when you're in a topping phase, because it will be the ones where all the money was made, from the hedge funds to all the institutions. That's where the big money was made. So those are going to be the last things that they sell, right? So for the last 4 months, I can tell you, I knew a downtrend was coming, or a down wave of selling was coming, because IBB showed up on a rally day in the down table. And I knew until it disappeared from there was selling to be done.
That's in time saver, you know.
Yeah. So as the paper, do you have access to the paper? We can look at it today. Does it come at 8 or?
PDF version, yeah, it should be. I don't know whether we can get it downloaded here though.
But that's the other thing that I kind of pay attention to. When I'm seeing the IBD on the downside,
Don't you know how
I
to
know
find
we're in
it?
trouble.
Stock list market trend. What's it under in here? Any idea?
That?
Yeah, I've never even seen that screen come. See, it doesn't even have me logged in. I can't even get logged in half the time in this thing. It kicks me out all the time. Have you noticed they kick you out of MarketSmith a lot now too?
I haven't been kicked out yet.
Oh, I'm getting kicked out because I use my iPad and the computer.
Well, if you use a different computer.
I always
yeah.
use different computers and I never got kicked out.
Oh, I always did.
Not like I am now.
That's one of the reasons why I don't use the,
See, look, I can't even get logged in. It took me like 5 times yesterday to be able to download that paper.